Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. Alright guys, let's hop into the charts, and we're going to start off with the weekly as usual. And what's bullish here is that we closed yesterday's weekly candle bullish. We are above the 21-day moving average. So far we have this very big candle that closed above the 21, and now this smaller one that closed above the 21. We also have the stochastics halfway up the range. We still have a lot more to go up unless we start to roll over. The only thing is we are very close still to the 21-day moving average, which is currently at 91,793. The week is starting off red. It's only the first day, so we can't put too much weight on this candle yet until the end of the week. But if things are starting to get a little bit bearish, it's possible that we could drop below during the week and still end up closing above the 21-day moving average next week Sunday. So let's see what ends up happening during the week. If we head over to the daily time frame, as you can see, the stochastics rolled over. We were toppy, we dragged for a very long time, but now we're starting to come down. What I'm liking about this though is that we kind of dropped down pretty fast. We're about to get like halfway down the stochastics here. So the faster we could drop down, the faster we could start trying to come back up from the bottom. But that's probably going to take a couple more days. What's bullish here though is that we finally crossed the 21-day moving average with the 200-day moving average, and we are starting to get close to price range. Currently the 21-day moving average here is at 91,420. We're currently, at the time of this video, is 4:30 p.m. Eastern time. Bitcoin is at 93,875. So what looks like here is we're starting to get a red candle. Yesterday we closed a red candle as well, which was pretty big. So the past 3 days have been kind of bearish, and today looks like we might close another red candle. So I wouldn't be surprised if we drop down to 91 to at least touch the 21-day moving average, and then hopefully from there start moving back up again. Something that we have to be wary about is I like to anticipate the moves ahead of time. So can this end up being a head and shoulder pattern where we go a little and go come up and then come back down? We have to be on the lookout for that. But so far, if I put back the patterns that I drew before, we kind of started coming down this flag. This falling wedge here I drew, that's from the 4-hour chart. But for this flag, we broke out of the flag at the moment. I'm hoping to bounce off the 21 and then get back into the pattern. Let's see what ends up happening with that. Okay, if we head over to the 8-hour chart, the 8-hour chart is starting to get oversold here. We're rounding out on the bottom. Again, we could drag here for a little bit before starting to come up, but it's looking a little bearish as well. We're below the 21-day moving average. What's holding us here as support is the 50-day moving average, which is currently at 93,113. We do not want to lose that, because then we're going to start heading down to the other moving averages. So it's very important that we stay above 93k so that we could continue being bullish. Heading over to the 4-hour chart, we see here we're starting to see a red candle. This was a green candle, but we have a wick here that we bounced off of, and it looks like we're starting to come down. Right now we broke the 21-day moving average, the 50-day moving average, the 80-day moving average. So the only thing that we have here for support is again at 93,000, which would be the 100-day moving average for the 4-hour. We want to stay above that, because if not, we're going to come down and test this 87,832, which is the 200-day moving average. If we lose this yellow line, this 200-day moving average, then things are going to start getting a little bearish here. The stochastics are low, but if we zoom in, they do look like they are probably going to roll over, come down, and probably drag here for a little bit. So right now I'm still seeing a little bit more downside. If I put the patterns back on, we dropped out of the flag, not by much. We could definitely still get back into the pattern. We want to reclaim this 21-day moving average, which is 95,511. Kind of far away from that right now. The new pattern that I drew was this falling wedge. We're technically still inside of this falling wedge, so we could hit the top, still come back down, and stay here to see if we end up breaking out. I'm gonna have to change the measured move now and put it down here. Now the measured move is gonna give us less. I believe the measured move before was 99,500, and now it looks like it's just gonna take us all the way back up to about 98,000, which will be a little bit higher than the last local high that we currently had, but it's not the 99, it's not the 100k that we are anticipating here on this channel. Now moving on to the 1-hour chart, take away the patterns, we're starting to get toppy here on the stochastic. Something that does look bullish is that this kind of looks like a W, which is kind of like a double bottom. So we take the measured move of that. This kind of shows us that it would put us back into the flag and all the way back up to about $96,000. If this does play out, hopefully it does, because it'll break us out of the falling wedge and back into that original flag. So let's see if that ends up happening. But the one thing that is bearish, like I said, is that the stochastics are starting to get toppy, and we are below the 21-day moving average and below the 200-day moving average. So the only thing right now that is saving us is the 2-hour 200-day moving average, which is currently at 92,994. Again, 93K we cannot lose. If we lose it on the 2-hour, then the next one is going to be the 3-hour, which is at 90,000, and then your last line of support before it starts getting ultra bearish is going to be the 4-hour at 87,832. So we have to keep an eye on this 2-hour 200-day moving average and make sure that we do not go below that. Taking a look at the 15-minute, again, we're below the 21-day moving average, below the 200-day moving average. Stochastics are still on the way down before they start rounding up. So overall, guys, what I would say is it looks like we might experience a drop, hopefully only to 93, but I could see us going all the way down to about 87,800. That's definitely possible. That's definitely in the cards. Overall, I'm still going to say midterm, long term, I am bullish on Bitcoin. I still think that we will get to 99K, 100K before we get a really big drop. But for right now, I could see some short-term price movement coming down. And today's Monday. We have to realize that also on Wednesday is the FOMC meeting where Jerome Powell will be speaking. So people are not going to be getting into Bitcoin, I don't think, like that today and tomorrow. Everyone's going to want to wait until that meeting is over to see what Jerome Powell says and dictate from there whether what he said was good or bad to either keep taking out of the market or keep putting into the market. So Wednesday is going to be a real big day that we have to look out for. From here to Wednesday, I still anticipate possibly sideways to actually coming down a bit. Once again, let's make sure that we don't go below 93. If we go below 93, we do not want to lose 87K. If we lose 87K, we might be in trouble. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you in the next chart.